What's going on, everyone? Welcome back to another video. In this one, I'm going to be talking about how to use daily profiles to not only confirm a bias, but once that bias is confirmed, how to frame high probability trades during the New York session when you have an understanding of how the daily candle will form. I'll be giving you 3 specific profiles to look for, going over certain invalidations, explaining why daily profiles actually work, and at the end, we'll get into the charts for some examples on how to apply it. Using this graphic, a daily profile on a really simple level is the lower time frame price action divided up between London and New York session, which are creating the formation of the daily candle. Once you have a higher time frame bias established and an expectation for the daily candle to expand in one direction, we can use the formation of London session to tell what New York will do in order to get an entry to get on side with that previous expectation. Here we have an example of a bullish daily profile where we would have the expectation for the daily candle to expand to the upside in an open, low, high, and close. That exact same idea applies here for a bearish daily profile where we would be having the predetermined expectation for the daily chart to expand to the downside in an open, high, low close. It's really important to note that daily profiles come second to understanding the higher time frame narrative and bias. A really big mistake to make is to use a confirmation tool like daily profiles without understanding the context, as that's only going to lead to really inaccurate reads on the market. And while establishing a higher time frame narrative and bias is not a topic for this particular video, I have a resource pinned to my Twitter which has everything you need to know, and I'll have it linked down below in the description, and I really recommend you check that out after watching this, as it's a big part of this concept. Just before getting into the explanation of the 3 daily profiles, I want to make a note on the time windows that I'm referencing when I talk about London and New York session. When speaking about London session, and this goes for all markets, I'm referring to 2 a.m. to 5 a.m. For New York, if you trade Forex, 7 a.m. to 10 a.m. And lastly, for indices New York, it's 8:30 a.m. to 12 p.m. And these are all in Eastern Standard Time. These are the general time windows we want to see intraday reversals and expansions take place, but there's still some leniency on either side. With that being said, we can now get into explaining the first daily profile out of the 3, which is the London reversal. This is a profile where the intraday high or low is formed during London session, where price reverses and allows New York to expand in the opposing direction. On the left here, we have an example of a bullish London reversal. Remembering what I said earlier on in the video, this is something we'd be looking for after having the expectation for the daily candle to expand to the upside. Here, when we're looking for entries to the upside during New York, we'd be looking back at London session to see what the framework was to determine what the daily profile is. We can see that price traded lower throughout London session, below the opening price of the daily candle, into a 1 hour or above point of interest, and then reverse from there into New York session. We can also pair this with a change in state of delivery to confirm that this is a London reversal, and that during New York session we don't need to see price return back to this low and can expand to the upside. If you're not already familiar with the concept of a change in state of delivery, as noted by this blue line here, I already have a video covering this topic. Referencing this daily candle for the bullish London reversal, we have the opening price down to the low formed during London session. This creates the opposing wick, and we would have the expectation that New York expands to the upside to create the bulk of the candle body into the high and close. Once we understand that this particular profile is in play during the New York session, we can assume that this London low will not be traded back to, and any PD arrays or entry signatures which are occurring within this range from high to low can be offered as entries to get on side with the bias. We have the same idea occurring here, but with a bearish London reversal profile. Again, we would already have the expectation that the daily candle will expand to the downside. Going into New York session, we would look back at London for the framework to determine the daily profile. We could see price trading higher above the opening price of the daily candle into a 1 hour or above point of interest, and then reversed into New York session where we'd be expecting an expansion to the downside. Again, using a change in state of delivery for a confirmation of this London reversal. Just as a note, ideally, the higher the time frame, the better for a change in state of delivery, but you'll likely be observing it on a 15-minute or 30-minute chart. Looking at this daily candle from the opening price to the high formed during London, this forms the upper wick, and we'd be expecting New York to create the bulk of the candle body into the low and close. Any lower time frame PD arrays or entry signatures which occur within this range here, with the assumption that this London high will not be traded back to, offers us a way to get onside with this downside expectation during New York. With both the bearish and bullish London reversal daily profiles, always think retracements and continuations for the entries. Here we have the complete daily profiles of both the bullish London reversal and the bearish London reversal. Remembering the general time windows, the London reversal takes place around 2 to 5 a.m., and the majority of the New York expansion occurs around 7 to 10 a.m. for the Forex markets and 8:30 to 12 p.m. for the indices market. Now that we've covered the first daily profile, we can move on to the next, which is the New York reversal. Within this profile, we look for the intraday higher low to be formed around New York open to see a reversal and then continue the expansion throughout the rest of the session. On the left here is an example of a bullish New York reversal. Again, we would already have an established higher time frame bias, looking for the daily candle to expand to the upside. Similar to the previous profile, we can see that London trades below the daily opening price, but the only difference is that it fails to reach any relevant hourly or above point of interest and shows no willingness to want to reverse throughout the session and continues the Judas swing to the downside. This framework for the London session, when we have an expectation for bullish prices throughout the day, sets the anticipation that New York will form the reversal to then expand to the upside. Looking at the daily candle, it's clear that we're trading below the opening price, but the low is not yet established, so we would have the expectation that New York creates the wick and sets the low to then expand to the upside, forming the bulk of the body of the candle into the high and close. Understanding that this profile is in play, we'd be looking for New York, and more specifically closer to New York open to set the reversal at an hourly or above point of interest, to then have a change in state of delivery in order to expand to the upside. One thing to note with the change in state of delivery on this particular profile is that while it's still ideal to use a 15-minute or 30-minute change in state of delivery for the best confirmation of this reversal, if you want a closer proximity entry and you're comfortable with it, then you'll likely have to drop down closer to a 5-minute chart. Now moving on to a bearish New York reversal as seen here. Again, and I will keep saying this, we'd already have the expectation for the daily candle to expand to the downside based on higher time frame bias. As we were going into New York to look for entries, we would then reference back to London session to look at the framework in order to determine which profile we were trading in. It's clear that price is trading higher throughout London above the daily opening price, but fails to reach a relevant hourly or above point of interest, so this would set the framework for looking for a New York reversal. Here on the daily candle, London is forming part of that opposing wick with the Judas swing, but we would be expecting New York to form the high at a relevant hourly or above level and then expand in the opposite direction, creating the bulk of that daily candle body into the low and close. The same idea for the bearish New York reversal. You should choose the time frame which you are most comfortable with to note the change in state of delivery to confirm that reversal and begin seeking entries to the downside. Here we have a complete look at the daily profile for both the bullish New York reversal and the bearish New York reversal. You'll notice that during London, around 2 to 5 a.m. is a Judas swing as price trades away from the daily expansion. And then with an extra emphasis on New York open, which starts at 7 a.m. for Forex markets and 8:30 a.m. for indices, we'd be looking for that New York reversal to then expand throughout the rest of the session. This profile offers lower time frame entries at the New York reversal, but if you want to be more conservative and wait for an intermediate term change in state of delivery, you can always play the continuations to capture the majority of that expansion. On to the third and final daily profile, we'll be covering the New York manipulation. For this profile, we look for the New York open to manipulate the London consolidation range and then expand in the opposing direction. On the left here is an example of a bullish New York manipulation. As we would already be expecting this daily candle to expand to the upside, that would add context to this consolidation taking place during London. Here, London trades around the opening price of the daily candle without showing a willingness to go to either direction, causing this range. When we see this consolidation forming prior to New York open, we have the expectation that price should manipulate the opposing end of the range to where our daily expectation is to then expand to the upside. This anticipation that New York should manipulate the external low of the consolidation range formed during London holds up whether there's an hourly level within the consolidation or if there's one that's resting below that hasn't been reached yet. The only scenario it would be acceptable to seek an entry to the upside without a manipulation of this external low is if the London consolidation range engaged an hourly or above point of interest and a correlated asset ran out that external low while the one you were looking to trade failed to do so. The presence of SMT on the overlapping daily profiles on two correlated pairs is the only condition to be taking entries away from an unmanipulated consolidation range. Referencing the daily candle here, it's clear to see that it's relatively smaller ranged as London consolidates around the opening price of the daily candle. From this point, we would expect this smaller range to be taken out when New York manipulates that low into an hourly or above point of interest and then expands in the opposing direction, creating the bulk of that daily candle into the high and close. Just like the New York reversal, there's more of an emphasis on New York open to form this manipulation, and then we would see expansion throughout the rest of the session. The same principle exists here on the right with a bearish New York manipulation. In this scenario, of course, we would have a higher time frame expectation for the daily candle to expand to the downside. Going into New York session, where we'd be looking for bearish entry signatures, we'd first want to reference back to London session and look at the framework to determine which daily profile we're in. It's clear that London is consolidating around the daily opening price with no significant move in either direction. Instantly, when seeing the small range, you want to think of New York manipulation. Looking at the daily candle, again, we have a small range and would expect it to be taken out for New York to manipulate that high and then expand in the opposing direction into the low and close throughout the rest of the New York session. The same thing applies here. The only scenario which we would take an entry to the downside without getting this manipulation during New York is if a correlated pair manipulated it during New York open and the one you were trading failed to do so, forming an SMT. All while the London consolidation range engaged the hourly or above point of interest. Once New York manipulates this external high of the London consolidation range, we can then look for bearish entry signatures to trade the expansion to the downside. For both the bullish and bearish examples of this New York manipulation profile, I still prefer to look for a change in state of delivery at the point of manipulation or SMT at New York open. Now that I've gone over all three high probability daily profiles and you have an understanding of what to look for, I'm going to show you one London session signature which can invalidate all three if it is to occur. While invalidations for daily profiles can become a really detailed topic, for the sake of this video, I want to keep it more simple. This is the one signature that you should really be focusing on. On the left here would be an example of when we have an expectation for the daily candle to expand to the upside. When going into New York, where you usually would be seeking an entry, seeing this large range expansion towards your draw during London is considered an invalidation of any profile. When London forms an expansion towards the draw, it exhausts the daily range and leaves New York low probability to have a continuation in your direction. Many times when you see this signature, New York will be very high resistance and will lack any one-sided expansion as intended by the daily profiles. This same exact principle applies if you had a bearish expectation for the daily candle. Going into New York, where you usually would be seeking bearish entry signatures, seeing this large range expansion during London would void any daily profile framework and would leave New York session very low probability. The ideal scenario for any daily profile when seeking expansion is for London to be relatively smaller ranged and to not have any significant deviation from the opening price of the daily candle. When seeing London expand in a large range, truthfully in either direction, you should immediately be questioning the quality of the intraday framework. At this point in the video, you should have a good understanding of the framework for the three daily profiles and also what invalidates them. Now I want to give some context using data as to why they actually work. Looking at this top row, we have the hour of the day, the average distribution, the average manipulation, and the average of the total range for each hour. And you can see that visualized here in this graph. While this may not look like much at first, I'll add some annotations and give some logic behind what you're actually looking at. Daily profiles are rooted in London and New York session because those are the two specific times where volatility is introduced to the market. Looking at 3 a.m. here, which is the London session open, this is the first hour of the day which spikes above the total average hourly range. You can see that spike in volatility shown on this graph below. I consider this a framework function, as this is the reason why London often acts as a reversal or a manipulation of the daily range. Also, when considering invalidations of daily profiles, if this spike in volatility during London session open results in an expansion, that's going to exhaust the daily range and leave New York unlikely to expand as intended. Moving on from 3 a.m., we can see that the ranges dip down below average, and then up until 8:30 to 12, this is when it picks back up again. 8:30 is when high impact news is being released. 9:30 is when the market opens, and 10 a.m. is when medium impact news is being released. As you can see here, 8 a.m. when high impact news begins to be released. That's when that first spike above the average occurs. Then you really see it pick up between the 9 o'clock and 10 a.m. hours. And this is where you really want to be on side with the market in line with the daily profiles for expansion. Looking at the graph below, 8:30, 9:30, and 10, these are entry functions, and these are where you're going to try to get on side with those large ranges using the daily profiles. While this is data on NQ from the past year, which is in the indices market, the same idea applies to Forex in a very similar manner. Now that all these topics are covered, we can now get into the charts and go over some real examples of trades I've taken in the past using the same logic. As I continue to say, the first step is always building the expectation for the next daily candle. Looking at this hourly consolidation range, price manipulated this external low on a Thursday, which is a consolidation reversal weekly profile. Going into Friday, I would be looking for an open, low, high, close daily candle into this opposing objective. Dropping down to a 15-minute chart as we move into New York session, I want to look back at what London did to determine the daily profile of how I can get on side with this expansion to the upside. It's clear that during London, we dropped down into a 4-hour price level and then had a change in state of delivery. Now during New York session, I'm going to look for retracements or continuations as entries. Here, these consecutive down close candles are acting as a singular order block, so I take an entry at 8:30. And there you can see the follow through up to the external high of that consolidation range, and this is where I'd be exiting my position, assuming the high of the day. This here is a complete London reversal daily profile. On the screen now, you can see my executions for that trade. Moving on to the second example, we're going to start with the daily candle expectation. Here within this weekly fractal, we have price expanding each day from this Tuesday high. So going into Friday, I'd be looking for a TGIF counter trend opportunity for an expansion back into the range. This would set the framework for an open, low, high, and close. As we're going into New York session at 8:30 a.m. and we're going to begin seeking entries to the upside, we're going to reference back to London session to determine which daily profile we're in. It's obvious that London is trading below the opening price of the daily candle in a Judas swing, but we can see it fall short of our point of interest and shows no willingness to want to reverse during London session. This means that we're in a New York reversal daily profile, and I want to see New York run out that low and then reverse price aggressively to get on side with an expansion to the upside. Here we have a change in state of delivery on the 5-minute chart, which offers as an entry and a confirmation of this New York reversal, knowing that we should not return back to this low. After playing this through, New York expands to our upside objective back into the weekly range, and this is around where I would be exiting my position, assuming a high of day on the open, low, high, and close of the daily candle. On screen here is a complete daily profile for a New York reversal, and on the screen now will be my executions for this trade. Now getting into the third and final trade example of the video. For the last time that I'm able to say it, we're going to start with the expectation of the following daily candle. Looking at this 4-hour chart, we have price running out this external low, reversing on a Wednesday, a continuation on Thursday, and that is a confirmation of a midweek reversal weekly profile. So on Friday, I'd be looking for a continuation up into the opposing side of this range. That establishes the framework for an open, low, high, close. Dropping down to a 15-minute chart as we approach New York session, we're going to look back at what London did to set the framework for the daily profile. We can see that London consolidated around the opening price of the daily candle. Seeing this, knowing we have a bullish bias for the daily candle, we want to look for New York to manipulate that low before expanding higher to our objectives. Playing through the next few candles, we can see that New York ran out these external lows of the consolidation range formed during London, is now returning aggressively back into the range. And while this example is a relatively larger manipulation than you would usually see, this is a high impact news day, so it's all relative. Taking this one step further on the 5-minute chart, as we drop down to lower time frames, we can see that there's a change in state of delivery within this manipulation leg that's going to offer an entry to get on side with this upside expansion. allowing the rest of New York session to play through. We can look back at London, seeing the consolidation, observing New York Open manipulate that external range low, the change in state of delivery on the lower time frame, and then the follow through on the expansion to the upside, where we'd be looking to offload our position, anticipating a high and a close. Here you can see a complete formation of a New York manipulation daily profile. And of course, on the screen now are my executions for this trade. To wrap this all up, we went over the details of the 3 high probability daily profiles, gave an understanding of when they're invalidated, explained the reasoning behind why they work with data, and gave you some real trade examples to study. And with that all being said, that's all I have for you in this video. I really hope you learned something new and found it helpful. If you did, let me know down in the comments, and I will see you in the next one.